what's good, everybody? So I did want to go over the analysis here on gold, what I do think will happen long term on this market. One of my favorite markets to trade is gold. The profitability is extreme when it is trending, even when it's not, even in a range-bound market. This gives us a lot of opportunities to trade. So I do want to go over this, especially since looking at gold, you have a strong understanding of what other markets would do, such as DXY and any other U.S. cross pair. Obviously, if gold is pushing up, that means the dollar may not be doing that great. And obviously, if it's pushing down, that means the U.S. dollar is actually increasing in value. So I do want to break this down, get a strong understanding of what we're looking at, and go from there. So obviously, the biggest thing you're always going to see me do when I'm jumping onto a chart and marking this up for the very first time, or just trying to identify an opportunity, is I'm going to scale out to a higher time frame. As you see right here, I'm just on the daily, just getting a strong understanding of the overall direction and trend. Now we can see that this market is extremely bullish, right? So we want to kind of identify if there is going to be any other bullish indications. As we can see right here, if we actually just mark this up, we actually were trending, we are trending, if you will, in this channel. Right, we can see this bullish channel, this ascending channel. So I do believe, especially after hitting the bottom of this channel wall, as we can just identify right here, that's giving us a bullish indication, right? That's showing us that buyers may be wanting to step in from this area, but we can't just simply use that as our indication. We have to identify other forms of confluence. One of the other forms of confluence is not just this trendline wall or this channel wall, if you will, but this level of structure that is currently being respected. Now, again, being on a higher time frame, such as the daily, is going to give us the overall analysis, the long-term bias of what this market may intend on wanting to continue to do. So since we have that level of structure, we have that ascending channel as well, we now must scale down to a smaller time frame to really understand the finer details, see if there's any other confluences, any other or more price action that we can identify that can really confirm the idea of our bullish bias. So what I am going to do now is scale down to the 4-hour time frame. Now, not the best idea, right? You can't really see too much, but there is some bullish indications. One of them right now not being confirmed just yet. We haven't really broken a high or made a higher high or a higher low. We did actually just come right back to this level of structure and kind of respect that area, right? That was a level of support that is acting as a level of resistance. So that sell-off could have been a very good indication for or even a potential entry. But what I'm looking at is a little bit more complex than that. I can't just say, well, that break of or that retest of structure should be relevant and we got to sell from there. When we scale down, right, we see that we are at a level of significant support. We have that channel wall. And when we scale down to a smaller time frame, and I do understand that we do have this bearish engulfing candle here, we are seeing that rejection from that structure. But when we take the overall picture, we're trying to go with the initial trend. So what I am actually going to add here is this trend line, because this could obviously be something of confluence here in the later date, right? If we have a break of this initial trend line, that can confirm continued buyers. So I'm going to leave that trend line since we now have our third touch. In order for a trend line to be valid, in order for it to be correct and something useful, it has to have 3 touches. And we can see here, just so that way you guys have the visual, we have our base, our secondary, and our trigger being a potential idea for a trade, right? You have that break in the retest here, you have that trend line. That could have been a beautiful sell to the downside, at least for this monetary moment. Because what I do believe is, again, the overall analysis is showing us that buying pressure is probably the better idea. Because when we scale down to the smaller time frame, such as the 1 hour, there's something that happened here that we do need to take note of. Sorry for any noise in the background. They're doing a bunch of landscaping outside, so I do apologize for that. But what I am looking at is a very familiar pattern. You're probably going to see this happen a lot in the majority of my videos. We have a pattern here, so important that TradingView has its own individual tool for it. So we have an inverted head and shoulders pattern. This being the left shoulder, this being the head, this being the right shoulder. Now, in order for a market to really give you a strong idea of a reversal, these patterns, such as the head and shoulders, or in this case, an inverted head and shoulders pattern, at a level of structure is extremely important. Because yes, there was that immediate sell-off from that break of structure, but what we can see is more bullish indications, more buying signals. Again, that level of structure based off the higher time frame on the daily, that channel wall, or if you just want to use that as a trend line, that is a bullish trend line and is also being respected. So when we scale down to smaller time frames, we're seeing the finer detail, right? We're being able to say, well, it did look like a sell-off, right? It did seem as if sellers were coming in, But what indications or what are the clues that the market is leaving behind that can tell me a completely opposite idea? And this is it, right? So that structure, this inverted head and shoulders pattern, and what we must take into account is not just that inverted head and shoulders pattern itself, but the break of it. We can currently see, if we just draw this trend line, the neckline has been broken on that aspect. And what we're also looking at is that structural break, right? It's not perfect, never going to be perfect, but what we can see is what this level of structure is the neckline of this pattern. I'm cheating a little bit. The neckline's a little bit bigger than that, but we're cheating a little bit because we can see the current market status. Now, you can in fact trade off of the trend line if in fact it did reach that point, but we did not. We're respecting the neckline of this pattern. So what I do believe is we're starting to get the identity of buyers stepping in. Even here on a smaller time frame, we're creating higher lows and higher highs. So we're starting to get that bullish pressure. So I do believe, at least right now with gold being Monday, start a new week at the time of the recording of this video, you can see right here that this would be our targets, at least first targets. Right, this will be the first area of structure that the market is going to gravitate towards to make its next decision, whether it wants to be a strong buy or continued buy, or if it's going to use this as a sell-off point. Right, this is a level of resistance. So for us right now, for myself and legacy students, we currently are actually in this trade as a buy. So this would be our targets one. Right, we're just simply buying off of the neckline or the structural break of this pattern. We can see that we have a bullish trend line in the mix here as well, added as confluence. And we can also add another factor, which is one of my favorite things to use, is your Fibonacci. We're going to go from the swing lows here to the swing highs. Now I'll explain the reasoning on that as well. So we also have the 61.8 Fibonacci retracement ratio in the mix. So anytime you're trading, you want these forms of confluence. You want these type of ideas, right? We're stacking probabilities in our favor. We have the inverted head and shoulders pattern, or let's backtrack. We have the higher time frame analysis, being that we're at the level of structure that we are there. We have the bullish channel, if you will, the ascending channel. When we scale down to a smaller time frame at that same level of significant structure, we're starting to get these bullish indications. The inverted head and shoulders pattern, the higher highs and higher lows being made, and right now the retest of that neckline alongside our Fibonacci retracement tool and also our trend line, our bullish trend line as well. Now, just in case anybody is wondering why I am also using my fib from this swing low and not this swing low, is because every time you are using a fib tool, you must identify its impulse and its initial correction, right? So this alone here is its own impulse, this little move, and this is its own individual corrective move. So when you are scaling, when you are measuring, you now have to identify the next real impulsive move, its own individual move, and that's it there. So what we can see, again, just to draw that up, we had that 61.8 Fibonacci retracement ratio. Oh, wrong tool. There we go. We have our Fibonacci retracement tool measured from swing low to the swing high. And again, we have that confluence of the 618. So again, I do believe that right now gold, for the remainder of the week, or at least for today being Monday at the time of the recording of this video, it will be bullish. I do believe at least these highs will be hit. Now, if that's broken, obviously we just hold on to dear life. We continue to hold to the next level of structure. Pretty sure you guys are seeing a pattern here, right? Everything is price-based. I'm not making my trading complicated. I'm not using these crazy terms. We're just simply using the clues that the market is leaving behind for us. So this would be targets 2 up here. So take profits 2 will be at those highs. That'll be a beautiful trade because right now, and I'll actually go ahead and show you guys here in a second, but we are actually in buys, if I'm correct, from this price, and our stop loss is just very tight, right? About 76 pips. Our first general take profits, 284 pips, not a bad risk to reward. Obviously, if that's broken, our targets 2 will be met up there. And I'll actually go ahead and just show you guys here. They are in, everybody connected to our auto trader as far as legacy students are currently in this trade. We are currently in profit. Beautiful little entry right there. Again, same reason. The reason why we have entered this in our auto trader for everybody is because of that exact reason, that breakdown on gold. So our targets, I'll actually just go ahead and add our first take profit just so we see. Yep, just about 270, almost 280 pips. And then take profits 2 will be about 572 pips. So I'm going to hold on to that for everybody that is connected to the auto trader. Obviously, here is the breakdown in case anybody needs analysis and would like to also place this buy for your own individual profits. So if you like this video, right? It definitely helps with the algorithm. I do want to grow this community to be something significant, something strong where a lot of people can gain knowledge from build and breed real traders in our legacy group. So if you're not a part of the Discord, feel free to go into the description below. The link is there, so that way you guys can be a part of our community. Stay updated with any and all trades, obviously any and all videos and uploads as well. I will be setting daily signals in there. I'm not going to set a signal today because it is Monday. It is very iffy in a sense. The volatility, the volume is not the greatest, so I do want to be a little bit risk-free on that. But on the auto trader, I can manage everybody's accounts. I can know it's very easy for me to enter and close a trade when need be. So this is the only trade that I really see that'll be the best, the most high probable trade setup for not just myself and legacy students, but for you guys as well. So with that being said, I'll see you guys on the next one. Please join the Discord so that way you can stay updated with anything. Go ahead and like this video as well. If you're not subscribed, subscribe so you stay updated with everything as well. Appreciate you. See you guys on the next one.